Good morning, Jags. This is Fahad. Today is Tuesday, June 23rd. How's everyone doing?
Pretty good.
Doing
How are
well.
you guys doing?
Morning.
Doing good. Hey, let me ask you guys. Um, I wonder if Trump fires Peter Navarro, how many thousands of points would that be equivalent to for Dow?
I don't know, is there a ratio or a formula from previous dismissals that we can use?
I'm gonna guess 2,000 points. That has to send the Dow index to all-time high, right? I mean, so
We
I,
hadn't heard much from Navarro for a long time until last night.
it,
Last night's 1 hour long period there.
just amazing what happened last night in the futures. I thought it was comical, frankly. I was laughing. I mean, you all saw that this is what happened. Look at this V shape, U shape, whatever you want to call it, right around 9 o'clock. Anyways, moving on. I have one stock that I want to discuss, and that is ATRC, Atricure. Now, a while back, this on April 29th, or sorry, 26th, on the homepage, Jay posted this beautiful article on Atricure, behind the numbers. This company is a medical device company that makes innovative technologies for the global atrial fibrillation epidemic, AFIB. The company is a very interesting company. We haven't really covered this as much, but the company has been posting really record quarter every single quarter for quite some time, and it pretty much stays off the radar. In this article, Jay discussed, the CEO, how the first quarter growth was 32% year over year. The appendage management franchise continues to outperform. They also said that they sold over 180,000 AtriClip devices worldwide, and they anticipate that this business will be even faster growing going forward from here. So lots of positive takeaways in this article. And the management was very positive on the total amount of interest that they continue to see from surgeons and hospitals for its Pro-V and Flex-V products, which was launched last year, and they believe that this segment is going to continue to grow for quite some time. Now, understand that this may be slightly impacted in the current quarter based on the elective surgeries that a lot of the hospitals had to put off because of COVID. And one should recognize while I'm talking about this that the total number, the total hospitalizations related to COVID in the United States are up 17% week over week. So, the hospitalization trends are indeed going in the wrong direction. Nevertheless, looking at the history of this company and what they're doing, they should be able to overcome all of this weakness. Now, I bring this up because there was a very interesting note out from Stifel last week, which caught my attention, in which they talked about. I'm going to quote over here. Today, only 50% of roughly 1,800 annual convergent procedures also use AtriClip to manage the left atrial appendage. And this should also support robust appendage management growth, 30% of sales growing at 25% year over year for the past 5 quarters. And Stifel went on to say that longer term, they believe management noted Lariat could represent another compelling appendage management solution used during convergent procedures. So a very interesting note from Stifel on Atricure that came out last week. The stock did not respond to that much last week, but I've been watching this closely. And technically speaking, it pulled back to what is clearly a technical support level. If you watch this chart, we had this is where the big breakout happened on very heavy volume. This was about $43 per share, and the stock ripped higher, went to new 52-week high, and has been consolidating for a month. And the last couple times it has retested that $43 per share and has bounced back. And yesterday on heavy volume was a bullish engulfing candle. So this sets up very nicely for a very easy entry, which means if somebody wants to go long, they can put a hard stop at $43 per share and look for a continued move to about 51, basically a retest of the prior 52-week high. So let me just draw a quick line over here. And then at that point, either the trade can be converted into a diagonal spread or calendar spread, depending on what you are trading with. I have not seen any kind of option activity in this at all. We never see any kind of option activity in this. It's very quiet, mostly zero open interest across the chain. So it's not a play on options, but purely a technical play, as well as some good positive thoughts based on what we saw from the first quarter earnings report, which was 30% growth in its key product, and then continuation of trends after management meeting with Stifel last week. So keep an eye on this one. Jay, what's up?
Hey, what's going on? Two stocks today. Number one is CBOE Global Markets. CBOE is the ticker. So, in case you missed it yesterday, Credit Suisse announced plans to delist 3 of their VIX ETN products, the most notable being TVIX. According to, let me see here, I believe it's KBW. They talk about how when you combine all 3, the assets under management equals about 1.3 billion, but it's TVIX that has 1.2 billion of that assets under management. Now, Goldman is downgrading the stock today, with that being one of the main reasons. And then KBW is out with a note saying, we view the announcement by Credit Suisse as an incremental negative for CBOE's VIX futures complex. We expect most of the assets under management to migrate out of the TVIX product within the next couple of weeks, and a majority of it may simply migrate to other long volatility ETPs. However, at the moment, there are no other 2 times levered VIX ETPs listed, so it would seem likely to us that there may be a net loss of volatility exposure. And then Goldman adds completely separately that CBOE's market share in these non-prop products, so US cash, US options, EU equities, they've been under pressure, and they could be under pressure even more when the upcoming launch of a new competitive exchange, the MEMX, comes to fruition in September.
Interesting. Good. Do you think that's going to become a pretty significant competitor to CBOE, September launch, that is, for Amex?
You know, to be honest, this is really the first time I've sort of come across MEMX. It's this members exchange, so I would have to look more into it.
I'm surprised that an instrument like this one, TVIX, had such a high assets under management, 1.2, 1.3 billion, whatever that was.
Right.
So that's going to be disappointing for a lot of volatility trader, I'm assuming. And there were a total of 3 ETFs. I think they're delisting.
Correct.
I think that's a market that's going to open up for new competitors to sweep in with a better product that is more reliable than the one that that TVIX has been over the years. So very interesting thoughts there. Second one.
Second one is Workiva. WK is the ticker on that one. We really last covered this in the Q1 Outlook under our key debate section. And the thesis there was that there was a European mandate that was going to be coming up. And so for those that do not know, the ESMA, or the European Securities and Markets Authority, they've established a mandate effective after January 15th, 2021, that requires all public companies in the EU to convert to a single electronic reporting format for submitting financial statements. So it's forcing companies to change from PDF to what's called inline XBRL, so that these reports can be read and understood by both machines and humans. Now, Stifel was out last night actually with a note following some European checks. So just before quickly getting into that, historically, when the US mandate for this same XBRL product happened, this was, I think, in 2011, 2012, something like that, but they say that the company grew at that time from 14.9 million in 2011 to 112.7 million in 2014. So, you know, this definitely presents a growth opportunity. Now, right now, the company has roughly 30 sales reps in Europe across the UK, Amsterdam, Paris, and Frankfurt. And the main takeaway that I got was, according to Stifel, their sources indicated that less than 60% of these European public entities have thus far addressed the mandate.
Uh, Always learn something new with Jay when you're talking with him. He's just a knowledge base of all the greatest stuff. When is this rule in Europe is supposed to go into effect? How much time do they have to comply?
So roughly 6 months.
Wow,
Yeah.
that's over the next 2 quarters. So they're going to speed up the process. And what percentage are already doing it, and they're not, or like how many are already complied? The last thing you mentioned there.
Yeah, they say, according to Stifel, it was less than 60%.
Okay,
So
still,
even we've called 50-50, half of them have not even addressed it yet.
yeah, that means that's a fairly large number. And lastly, is you think Workiva gets all of that business, or there could be another players in this space that
Well,
could?
right now, from the checks that I got, Workiva is targeting the top 2,000 companies in the
Okay.
EU. But I don't know from a competitive landscape who else they would be competing with. I think more than likely it would just be third-party vendors.
Yeah. Yeah, that's very interesting. So 6 months, that's next 2 quarters. By the end of the year, potential major order growth coming for this company. And I would assume that this would also change the revenue mix a little bit, including increase the total percentage of its recurring revenue base from this.
Mhm.
We gotta watch this carefully because that's a chart also technically starting to break out through VOP resistance level on heavy volume. This could continue to run if that's the angle that we have fundamentally on this one based on what's coming down from Europe. Very interesting. Might be on its way gradually to rise all the way to new 52-week high. Great stuff. Chronicle.
Morning.
Good morning.
Couple of things this morning. Firstly, KeyBank note was just out with their analyst channel check, projecting a notable sequential improvement in June container import volumes at the port of LA. Although the note was ultimately about JB Hunt, I think this check is a good read for Rexford. Second item, I'm looking at rig counts today, specifically the possibility that rig counts may begin bottoming in the second half of the year. Not really a short-term trade idea, but more of a longer-term theme. As we know, national rig counts have plunged from the 900s to just 260 in the past year, down about 71%. And oil prices tend to have a long lead on rig counts. For example, if we look at this chart of rig counts and crude futures, we can see when crude started to drop back in late 2018, it took almost a year for rig counts to gradually correct and normalize. And now, with oil prices having recovered back to the mid-30s, I think it's going to stay range-bound for the remainder of the year, perhaps with a slight upward bias. I don't think we're going to revisit $20 anytime soon. Similarly, both Citi and Bank of America have written about this in recent weeks. To sum up their notes, Citi thinks the rig bottom will come in the back half of the year, while Bank of America says shale production declines will be less aggressive than feared, and that US rig activity should double in the US by the end of next year. So I am expecting rig counts to gradually begin bottoming, and judging by how rig owner and equipment stocks like Helmerich and Payne, Schlumberger, and Halliburton have all been in uptrends over the last couple months rather than flat, it tells me that the market has been trying to front run this. So this is not really a short-term trade, it's more of a long-term investment sort of idea where we may want to gradually dip our toes into. Personally, I would stick with the bigger and more established companies like the ones I just mentioned, because with oil in the high 30s, a lot of the smaller drillers still cannot break even, regardless of whether or not they've taken actions to preserve liquidity. So best to keep it simple here.
Interesting stuff. I have been also just yesterday, indeed, I was noticing when crude oil was starting to break out through $40 in the very short term. And I said to myself, when I was looking at this chart, crude oil, I'm like, okay, this is now above 40, and we saw the Friday rig count number, which was down again last Friday. Naturally, this price is telling me in the crude oil that there is an equilibrium in the price, in the supply and demand, that the crude oil has finally found, and perhaps there's now far less of a supply with the reopenings that are taking place, thus pushing the crude oil prices higher. Maybe the industry has gone far more aggressive in cutting supply, maybe too much, basically, in the short term in the last couple of months than they should have. And so reasons to believe why the crude oil continuing to push higher, especially with reopening, and that's causing the demand to come back. Now, with that said, when I was looking at crude oil, I was also looking at XLE, and I was saying to myself, okay, this thing has pulled back rather from 47 to 39. And if you look at XOP, similarly, this has also pulled back. Now, these are shale producers as well as integrated oil producers, and the ETF for the oil services companies, which would include naturally the Halliburton, Schlumberger, Helmerich & Payne, and all of those have also pulled back. So maybe there's a little bit of an opportunity if the crude oil continues to push higher the way it is. And this morning, again, it's higher by about 1.6%. These oil stocks are going to move. Ultimately, they're going to catch up, whether it's those oil services companies you mentioned, or it's shale producers like Pioneer Natural Resources, PXT, EOG Resources, and all of them. They have all pulled back in the last couple of weeks. Good stuff. And by the way, folks, on the first point that Chronicle mentioned, Rexford Industrial, and how the total amount of traffic on the LA ports have increased, that being positive for Rexford Industrial. This is the stock that we covered with a Jaguar Media video where Chronicle gave a presentation a couple of weeks ago. You can go to Jaguar Media and you can find the full video over there. Might be worth watching it again if you want to familiarize yourself with the bull case again. Great stuff. Avo?
Looking at Etsy this morning, Fahad, and we have talked about it here and there in the chat room. Yesterday Goldman Sachs had I believe an upgrade on the stock, and this morning RBC has a note out in which they are increasing their price target from 79 to 117. And now they are just going back to April numbers where Etsy had acquired 6.5 million buyers, 4 million of these which were new ones. That's 2.5 times historical monthly average, and 2.5 million were folks who I suppose they were on the platform already, but they had not made any purchases for over a year. So 2.5 million of those resurrected themselves, and that's nearly 3 times the historical average. And according to past trends, the RBC analyst believes that 25% of those 4 million new buyers will stick around. So this will help going forward, from here, obviously. They also had a survey out to RBC, and they're pretty consistent from past trends, and which reinforces that 40% returning number that I just mentioned. Some good data here, some strong numbers for the company. I mean, I'd like to say that this is not overbought, but it is. It's also up another $3 this morning. Maybe keep an eye on it. On the weekly scale, it's really overbought. On the daily scale, looks like it's got some more room. But definitely keep an eye on it.
Yeah, for me, I think those checks are pretty good, but for me, on both daily and weekly scale is getting stretched. So entries always have to be weighed against the risk reward of where you want to enter. And on hyper growth names with high beta positions, one is always better off just waiting for pullbacks to re-enter. And we have done quite a few times those ideas where 5-10% moves in these stocks is very normal, and you just wait for them, and when they come in, you just take advantage of them and step in. Slightly off from 52-week high from yesterday, and then catching those momentums on analyst upgrades I think those checks are very good, but I think it would be best on a retest of $88 per share. And I understand to some this may seem like quite a bit of a room to go then from 96 to 88. But yes, I think these kind of pullbacks do happen and can happen. And at that point, a lot of this overbought readings looking at RSI and MACD lines would have also corrected to neutral state. So we wait for that, and then we can bring up that discussion about fundamentals and watching the option activity at the same time for entries.
Yeah, absolutely. Last, I just checked, last official trade we were in was in early March before that earnings release, which proved, worked out pretty well at the time. It was a webinar trade in any case.
Yeah.
So keep an eye on this one, and I agree with what you said. And it is overbought, and it's not something that I would jump into at this point, but definitely put it on the list.
Yep, sounds good. All right, that was great discussion. Thank you everybody for joining. We're going to cut it off here, and we will see you in the chat room shortly.